The Bitcoin Group, the American original. For over the last 10 years, the sharpest Satoshis, the best Bitcoins, the hardest cryptocurrency talk. We'd like to welcome our panelists. Ben Ark from LN Bits.
Good evening, all.
Josh Shigala from thestandard.io.
G'day.
And I'm Thomas Hunt from the World Crypto Network. Moving on to the world at war. The price of Bitcoin, quick refresh from bitcoinal.com, created by DJ Booth, is down 1.52% in the last 24 hours, with a last of 105,200, a high of 106,920, and a low of 102,660. That's $1 for 951 Satoshis, almost seems unchanged since last week. The Dow Jones Industrial Average is down 1.79% in just today. As you can see previously, it fell from a high of 42,984 to a current low of 42,197. Just right now, before the show started, Iran launches ballistic missiles at Israel as Supreme Leader vows to inflict heavy blows. Many of these missiles may have been interpreted and stopped by Israel's Iron Dome system, but Iran is attacking after yesterday when Israel strikes and kills some of Iran's most powerful men, including military and nuclear leaders, after Iran was found to be continuing work on their nuclear program. Some saying that the United States, according to whistleblowers, may have even coordinated and approved of Israel's strike. Of course, here in Bitcoin land, crypto altcoins lead slide as geopolitics spurs haven demand. Because of the Israel-Iran war, the price of Bitcoin is down around 5%, Ethereum off 10%, other altcoins down as well. The memes are flowing on Twitter. We're waiting for crypto alt season. Instead, we get potential World War III, Israel, Iran at war. Ben Ark, what do you think of the current situation and, of course, its effect on Bitcoin?
Well, I mean, I haven't really been paying too much, for my own sins. I haven't really been paying too much to the regular sort of news cycle. I mean, I've heard obviously that there's been a lot more, the conflict's ramping up, and Iran were attacked. And this is why Israel gets such support. Is if you look at the map of the Arab world, you have just sort of Israel in the middle of it, and 8% of the population is sort of Western aligned, and the West just don't want Arabs to have nukes. So this kind of makes sense. This is like where it would all escalate to, we've worked for decades to not allow the Arabs to have nukes. So I guess that's, this is why Israel manages to get away with so much, because strategically it's such an important ally to have in that region. Well, so they think, so they believe. So yeah, it's bad. It's yet another place or another kind of tinderbox which could kick off a world war and bring humanity to its knees. Let's hope it doesn't. And on the Bitcoin price, which kind of seems very futile in comparison to people dying and suffering, of course. I think the price is probably going to go up. There's a lot of bullish things in the market, but it feels a bit distasteful to talk about that when there's all these horrendous things happening in the world. But there was a very interesting interview I saw with Naomi Klein, who wrote the book Disaster Capital and the Shock Doctrine. And she spoke about Israel as a citadel, which I thought was really interesting, in that it's this very technologically advanced society, and then it has this crazy Iron Dome thing, and it exists within quite a adversarial environment, but it continues to exist there. But it was kind of an interesting take to frame it as a sort of modern day citadel. I thought it was interesting, but apart from that, I don't really know enough to comment on the whole conflict.
It almost feels like a Mars colony at this point, Ben. Everything around it is trying to kill it, or if you see it the other way, it's trying to kill everything around it. It's definitely a very, very hot situation because of choices made years ago. Like Ben said, it doesn't matter with all the death and horrible things happening around us, but I want to stand up for the hodlers, for the investor class. You've been working years to make this money, years and years, and we were going up. It was looking good. All the chart guys had us up. You got this allegedly crypto president in the office, and things were good for us. Then events outside of our control, Israel attacks, Iran counterattacks. Likely Israel will counterattack after Iran's counterattack. I don't want to get too pessimistic and World War III here about this. I talked to ChatGPT recently, and it said everything is going to be fine. Israel and Iran have had these kind of wars before. Israel and Egypt have had these kind of wars before. Usually, and again, we don't know what's going to happen in the future, but according to the past, these wars generally stay in the region. They stay contained. There are, of course, horrible loss of life on both sides, etc. But hopefully they'll tamp this down. They'll cool it down. But there is also a Politico article out there where they are speculating that Israel might, originally Israel is upset because Iran is continuing their nuclear program. So they might have not just attacked scientists, but military leaders, as well as maybe key military leaders, perhaps seeking to drive a coup or a change in leadership or direction in Iran. So that's a fascinating element of this to watch. It's like being back in a 80s Cold War spy type movie, and we have no idea what to believe. Josh Shigala, what do you think so far? Israel has attacked Iran. This, of course, affects the price of Bitcoin. In the short term, it's down. Ben thinks in the long term, chaos is good for Bitcoin, and that's our brand. So maybe good. I don't know.
Yeah, it's very, very sad to see more war. And one of the things that I think is really interesting is the sea change that happened over the last that I've noticed over the last 10 years is that the right have become the peaceniks, generally speaking. They're the ones that are very like, I want my organic farm. I want to be left alone. Don't get into wars. America shouldn't have these foreign wars. And I'm seeing it everywhere on the right. Honestly, I'm very deep in all of that. All of my feeds are like on that spectrum. And they're all saying, this is Israel's war. We don't want war. And all of these people are saying, we don't want war. Leave it alone. If they want to go to war, that's their thing. We're not going to stop them. And I find it really fascinating because as coming of age and seeing the Iraq War 1 and 2, the right was always the big trumpet blowers of the war horns and the war drums, specifically around the nonsense around WMDs and weapons of mass destruction and stuff like that. And so yeah, that's a marked change to say, hey, yeah, okay, Israel, you can defend yourself, no problem, do what you need to do. But we the people that voted for, the MAGA side of stuff don't want it. They just don't want anything to do with it. So that's interesting. The second thing is that,
well, but unfortunately, Josh, like I agreed, the initial reports where they were saying that perhaps Trump's hands-off policy, perhaps his weakness, if you want to say that, the idea that there's this open space where one can attack whatever countries they want, led to this. But the most recent reports from whistleblowers, according to the Jerusalem Post, is an American administration was presented with evidence of Iran's breakthrough towards a nuclear bomb. There was full and complete coordination with the Americans. So it seems like the Trump administration perhaps was involved in the planning of the attack, knew about it beforehand. And again, it may be proved, again, there's a debate right now on both sides whether this is the case, but you do have to open the possibility that they were certainly aware, made aware, and perhaps even coordinated. So, well,
first of all, I'm talking about the people that voted for the guy. I'm not talking about the administration. I'm talking about the zeitgeist of the people and what I see, the conversations coming out a lot. All of like I see zero only on the extreme like Christian side that are for Israel. Even they are like, we don't want anything to do with it. The second thing that we have to look out for And that sort of post is drawing on this. I don't know if it's true or not, but there's always in war this massive fog, right? But the second thing is we need to watch out as citizens, as people, peace-loving people. We need to watch out for false flags, because when there's an engagement that can be very strong, it's very easy for the people, for one side to create a calamity and make it look like the other to draw them in. And this is a modus operandi that happens every single time. We've seen it over and over and over again. And it's been declassified that Israel has done this to the states before. And we've seen it in multiple fronts. So it's important, if a calamity happens, not to knee jerk, because that knee jerk is just, get them. And so that's important. So keep an eye out on that. And these sort of news, it's in Israel's interest to get US in. And so stuff coming out of, propaganda newspapers and stuff, I just would take it with a grain of salt. But yeah, I just hope I hope that this can stay very quick and people can find trade deals somewhere.
It is interesting, Josh, which side and where America should be and what they should be doing in this situation. It's tough, though, to go back to the isolation views of the 1920s, given what we learned in World War II, that if you have an isolationist view, that the evil will continue on in the world. If you don't go back out and try to stop that evil, staying at home in your cabin, the world getting smaller and smaller and smaller, seemed like a bad choice, as opposed to the all unfortunate having to go out and fight the evil.
That's kind of to Josh's point about how on the right there's a much more insular homestead kind of ideology which has emerged, which is to protect yourself, those around you, and then the rest of the world. Not that they don't care about the rest of the world. I wouldn't want to say that because that'd be wrong. But to be less interventionist, I think, from the, like Josh was saying, from the voters. And this is where the idea of strong borders come from. On the right now is they want to kind of be much more insular. Whereas what you were saying about getting involved and picking a side and being a bit more interventionist. Maybe that is. I'm not sure. Yeah, I think it's
the war machine will always want you to intervene constantly, and they will trigger, whether it's a nation or the war machine will trigger something like a Pearl Harbor event to get you into that war.
Yeah, because I mean, people make so much money. Like this is the problem.
So much money, it's insane.
They just want continual war because they make so much money. Yeah.
Yeah, and generally they want little skirmishes, like the countries that can't defend themselves, like Iraq. But then, Iran is not Iraq. Iran is a lot larger, a lot more population, a lot, I mean, they don't have that much money. But yeah, it's no good. But Thomas, you're spot on. Like these skirmishes in the past, they haven't blown out. And I don't think it's World War III sort of stuff. Russia, on the other hand, is World War III sort of stuff, because NATO is a whole bunch of countries that are bound to act if something, happens to land on the other side of the border. So, and that could escalate a lot quicker than this. This will, sadly, it'll hurt a lot of people and kill a lot of people if it escalates, but it'll stay in that region.
And I think it rallies
what
support.
Chat was saying too, Josh, because you're mainly looking for what outside countries are going to jump in. NATO's all connection, Russia has allies, but in this case, it's mainly Hezbollah or I forget the other name, Hamas, who would probably be involved. But again, smaller forces, less of a possibility of a domino effect escalation like we saw in World War I.
I'm not sure. I mean, it could rally Arab support. So you have like the Palestinians are attacked, and it's a relatively small population of Arabs. But then if you look at the amount of resources the Saudis have access to, and the Turks and Libya and all the African Arabs as well, like it's They're surrounded by a lot of Arabs, a lot of
Yeah,
well-funded
but the
Arabs.
thing is, if they cared about the Palestinians, they would actually accept them in as refugees, and they don't.
Well, no, I
So
mean
it,
they would argue that the Palestinians deserve to stay where they are and fight for their homeland. So that's why they would. But I mean, bringing Iran into the conflict could potentially rally a lot more support
I
from
mean,
the rest
Iran
of the Arab
has
nations.
been antagonizing consistently for a long time. Apparently.
Yeah, I mean, like the first major computer was Stuxnet, wasn't it? It was the first virus, which was created by nation states to attack the Iranian nuclear program.
Nuclear stuff. Yeah, but
Yeah.
I mean, we've been hearing this nuclear nonsense for 40 years, and yet you hear it like they're a week away. They're a week away, guys. Like
They're
for
not that
40
far
years,
away.
they're a week away.
Yeah.
Screw your lies. It's just this nonsense to get you into war.
It didn't seem like a big surprise that Iran was still working on it. Certainly, I have no inside information. I watch TV like everyone else, but to say that Israel was surprised, but it does seem like they've taken another one of these existential all or nothing actions that they seem so oft to take.
But looping it back to Bitcoin, this is one of the value propositions of Bitcoin, isn't it? Is that if printing money becomes harder, then printing tanks becomes harder as well. And
That's right.
it's an old talking point in Bitcoin, and I think it has some validity.
But so does printing money for hospitals and printing money for everything else. So
Big
the
time.
whole society will have to go to more of a libertarian structure. If Bitcoin, and that's why so many Bitcoiners originally are libertarians, because they understand that when you don't have the power to print your own purse, then you need to actually create value. You can either extract it by force from the class that are actually productive, or you can reduce the power of the state and hope for voluntary safety nets to be built around, like insurance and stuff like that.
Well, as you know, I still think we'll continue to have soft currencies for a long period, but they will become more like quote unquote honest. So that whether it's a federation or something, like you will be able to create fiscal stimulus to build the hospital, to build the road, whatever. But it would have to be a consensus mechanism from the majority of the people and industry which lives in that country. Whereas when you look at the Iraq and Afghanistan, it really was flip on the money printer and then enrich all of our arms mates and cause conflict. Whereas I think that's less likely using the tool set we have. If you can still have Bitcoin, but then also soft currencies for prosperity and investment, like I think we can maybe have the best of both. Who knows?
Going back to what Josh said about the false flag situations, I do think we need to be on guard. And there was another possibility with the situation in Los Angeles with the National Guard and the Marines, where possible agitators could have escalated the situation, or general violence could have gotten out of hand, leading to martial law or other issues like that, which we should definitely keep an eye on, because that would certainly affect business. It would be ironic as well if Trump approved or was involved on the attack on Iran, given that, like Josh says, many people believe Trump to be a peace president and an anti-war president that would try to stop this kind of thing. Although we have seen in the past, Bill Clinton wanted to govern a certain way. Once he got into office, they sat him aside and they said, no, you can't do those things. You can't change the economy. This is our situation here. It's very dire. Perhaps similar things were said to President Trump. Of course, he's publicly been a fan of Israel many, many times.
He also needs the army on side, doesn't he, and the generals as well. And if they want to rally support around Israel, then it's pretty hard for him to go against that.
Could be. And to close out, we have the magic 8 ball to predict the future of Bitcoin price, as a war is currently affecting our future. So we will go back to plastic. Ben Ark, will the price of Bitcoin be higher or lower? The war likely continuing through the week.
I actually don't think the war has that much of an impact on the price of Bitcoin. I don't think anything can have that much of an impact on the price of Bitcoin. Currently, with the all these strategy companies hoovering up Bitcoin reserves on exchanges at an all-time low, and then soon to be a huge wave of of retail investment. So no, I feel that the Bitcoin price can only go up quite a lot from now.
Josh Agala, Henny Penny, the sky is falling. But what about the price of Bitcoin?
Sky is falling. The weather is great. Don't worry about it. The price of Bitcoin will be, it could be lower this time next week. Yeah.
I'll remain bullish. I'm always bullish. I think Bitcoin's great. I think, like Ben said, it's a chance for some of those treasury companies to scoop up some more cheap Bitcoin at the hands of retail who keep selling at every jump and dip. The price isn't going to go straight up, despite what Saylor says. It's going to go straight up, then down, straight up, then down, straight up, then down. And this might just be one of those downs, not necessarily related to the conflict and all the news. But the 8-ball is the source of truth, the only one who knows for sure. And we will ask it now. Will the price of Bitcoin be higher this time next week? And it says, it is decidedly so. It is decidedly so. The ball remains bearish despite outside events.
Bullish, right?
Bullish. You're right. Bullish ball. The ball is bullish. Moving on to issue 2. Crypto industry's coveted market structure bill is doomed, lobbyists say. The landmark bill's odds of passage may have been derailed by macro political forces, crypto policy leaders believe. We're talking about the, let's see, I had it written down, Clarity Act. The Clarity Act, which is alleged to give regulatory clarity to cryptocurrency and Bitcoin, is blocked again due to the attempts to include conflict of interest legislation. The Trump coin issue is rising up as Democrats are using it to block the crypto regulation, hoping that they could limit perhaps future presidents having their own coin. The Genius Bill, touted by J.D. Vance at the recent Bitcoin convention, seems already dead and not going to happen. Josh Shigala, they got a lot of executive orders. They got Ross freed. But as far as actual legislative accomplishments, it doesn't look like the right-wing Bitcoiners are going to get anything. What do you think about the Clarity Bill, the Genius Bill, and the possibility of the United States codifying these regulations? Remember, an executive order, if there is another election and another president, could be overturned by a signature. A law is a much harder thing. Go ahead, Josh.
Well, in the wisdom of old Bitcoiners, memes, the meme is, this is actually a good thing for Bitcoin. And, we don't need no stinking states. We don't need them. We don't need no stinking badges. Okay, so what will happen is some other country will go all Michael Saylor and just start stacking sats. And then another country will, and another country will, and another country will. And eventually the US goes, geez, we better. So they'll print a whole bunch of dollars and they'll pump it into Kraken and Coinbase or whatever, and they'll start stacking as well. It's just a matter of time.
Ben Ark, your thoughts on the political possibilities in the United States for crypto?
Yeah, I think Josh is right. The Treasury bug is out the bag. People realize that if you have cheap money alongside, not cheap money, which goes up in value, they can't really coexist together. And I kind of feel that we're in this like thermodynamic feedback loop where the cat's out of the bag and companies will want to accumulate Bitcoin. These treasury companies exist and countries will start accumulating Bitcoin because they'll know that the asset's probably going to go up and go up quite a lot. And as that becomes a self-fulfilling prophecy, then everyone will just try and get more and more Bitcoin. And then I think maybe we're covering a story about it a little bit later on the treasury companies. What impact that'll have on the economy, I'm not entirely sure will be so positive, but eventually, when people start owning their own Bitcoin and owning their own keys, I think it will be a positive thing. but yeah, no, it's, you see it with the Steak and Shake and the other companies which are dabbling with accepting Bitcoin via payments. For them, it's just dollar cost averaging in Bitcoin onto their asset sheet, and for good reason, because it's, if you're a business owner, you want to accumulate some Bitcoin, put it on your business's assets, and it'll go up in value, and you'll get a pat on the back from your VCs and your shareholders and your board of directors and everyone else. So it won't go through as it is, but we are going to have much clearer regulations in the industry. It's funny because I've been speaking to VCs now with the Bits raise for the past 9 months. And when I started, the kind of the pitch was that we have this Nostr.com thing, which is included with Bits, and Nostr.com has potential to be a unicorn and create a lot of value. On the payment side, we all know it's amazing, but it might take a while for the rest of the world to catch up to the fact that Bitcoin payments make sense for their businesses, but it will happen. Whereas now, I'm much more, with the Steak and Shake thing and Spar and whoever else, I'm much more bullish on these companies just seeing payments as an easy way to dollar cost average in some Bitcoin into their assets. So yeah, I'm bullish on Bitcoin regulation. I think that the time has come that, particularly with it being such a big part now of Wall Street, the time has come for clearer regulations. They don't have to necessarily be friendly, just clearer regulations as to what you can and can't do with Bitcoin. And yeah, we don't need them ultimately, so whatever. But it would be nice if people who were operating in clear net land and they want to accept Bitcoin payments, that they can without having a fear of going to prison for it.
Yeah, as a company, sorry, Thomas, as someone that's run companies in the space, it's like that. As a company, you care about regulation and you care about clarity from the state, because they're the ones that will come in and they're the ones that dictate whether you can partner with banks and stuff like that. And but for Bitcoin itself as a soulless entity that is perpetual and just keeps going, it doesn't care. It doesn't care whether your business fails or goes. It doesn't care if your protocol works. All it cares about is hashing a new block and mixing it with the last block. And so it's an interesting thing as a builder in the space, because as a builder in the space, specifically if you come with anarchic leanings and these philosophical leanings that are generally a little less friendly towards state apparatuses, you have to bend the knee a little bit towards that. And that's not to say a lot of businesses that are in crypto on Bitcoin themselves don't have a single bone in their body that is driven by philosophy or anything. They're driven by pure market need in something, and they're happy to deal with regulations. So regulations will come and the clarity will come. So it's good.
It's also, I suppose, it's also been good to not have clarity in a way, because that has pushed for sort of more non-custodial solutions. Like if from the onset, the world was very friendly to Bitcoin and people accepting Bitcoin payments and holding Bitcoin and transferring value through Bitcoin, we probably wouldn't have anywhere near as many non-custodial solutions as we're starting to get in Bitcoin from trying to evade regulators.
Well,
Yeah,
we also have things like Tether, though, Ben, that all-powerful billion-dollar, trillion-dollar organization that's out there that so far is, neutral good, but could be evil at any time. Go ahead, Josh.
No, I've got nothing more.
I was just going to say then, I've said what I've said on this before, but I'll say it again. I think that the conservative Bitcoins did what they could. They took the advantage they had. They won big. They got Ross free. They got a lot of positive news stories about crypto, a lot of crypto people in the right positions. It doesn't seem like they're going to get legislation passed, though. They're not going to get laws that are hard to change on the books. They're going to get executive orders, which are easy to change. But again, this goes back to the long-term strategy that we need both sides, Republicans and Democrats, liberals and conservatives, to agree together on this, that Bitcoin is good for them, crypto is good for them, and that together we can craft legislation that we would both agree on And that's where I think we'll get the regulatory clarity and the other things that the business people are looking for. But I'd watch out for that tether thing. Watch out for that tether thing.
Yeah.
Moving on, check out worldcryptonetwork.com, where we've got new shorts featuring Juan Galt and Victoria, Dan Eve, and more at worldcryptonetwork.com. Moving on to issue 3. BlackRock owns 3% of Bitcoin, and that changes everything. Basically, the article from the tip sheet or Tipranks investor website says that now that BlackRock is heavily investing in Bitcoin, it's time for everyone else to get in. Bitcoin is no longer a fringe bet associated with tech libertarians and early adopters. According to the article, it's sitting in the portfolios of some of the largest money managers on earth. 3% of the supply. Only one person holds more Bitcoin than BlackRock, and that's Satoshi Nakamoto. Ben Ark, what do you think about BlackRock taking Bitcoin seriously and what this means for the rest of the Bitcoin market?
I mean, that kind of plays into our previous topic, doesn't it, about the regulatory side of things. Like, if Bitcoin has kind of infiltrated the system as much as it has, like, it has to have regulations, and probably quite favorable regulations. There is a systemic risk, though, with all these businesses, people getting access to Bitcoin via the trusted third parties like BlackRock and Strategy and whoever else, in that you need to prove the funds actually exist. You need to, the whole point of Bitcoin is to balance the books. Like, we had 2008, and then Satoshi invents triple entry bookkeeping. Like, we have this blockchain thing where we can verify all the transactions exist and it isn't being inflated and blah, blah, blah. Whereas without some sort of proof of reserves, which I know is shaky at least, but it's something rather than nothing. Like, for people to be in the markets, to be accessing Bitcoin via these strategy companies and BlackRock and whoever else, like, there is an issue there where potentially it could cause a systemic risk. And there is an irony that maybe, the thing which is created off the back of the financial crisis to prevent another financial crisis causes a financial crisis. Which potentially, I suppose, could probably happen if enough people are just accessing Bitcoin and they don't hold their own keys. So yeah, good and a bad thing. I don't know. Like, good for the Bitcoin ecosystem temporarily, but then there's also that great fear if it goes down in value, and then all these beer myths start selling off their Bitcoin, and then they don't really have the Bitcoin there. Like, what happens then? Like, what impact does that have on the markets? So.
And of course, we have Michael Saylor saying recently and implying that proving Bitcoin reserves would somehow hurt the security of his Bitcoin. He said that behind the Bitcoin, there could be nothing but loans. So they'd take the Bitcoin and it wouldn't matter if you proved it, which is ironic because at the same conference, he was saying that everyone should be taking loans to buy more Bitcoin, so on and so forth. It almost seems, Ben, like we need not only proof of reserves, but proof of time lock. If they could say these reserves are locked up for 100 days or 1,000 days, and if it was cryptographically and written and time locked, unchangeable, it would be an acceptable proof of reserve. Something that Saylor could not say. You just have to sell to pay the loans.
You mean proof of stake?
There you go, Josh Shigala. What do you think? BlackRock owns 3% of Bitcoin. The only one who owns more is Satoshi Nakamoto themselves.
Well, the language is interesting there, right? You're saying BlackRock owns, and so do the ETF shareholders own the Bitcoin? People would say no, they don't. Okay, well, does BlackRock own the Bitcoin? Well, actually, on the same principle, no, they don't. Coinbase does, because they have the private keys to those Bitcoin. So actually, the custodian is the one that owns the actual Bitcoin. And that's also with banking regulations. If the bank has your money, the bank actually owns that money. And they promise to pay you when you want it back. But And they give you an interest rate on that for the privilege. Now, Bitcoin's a little bit different because it's not officially a currency in the US, but yeah, that's the interesting conundrum, right? Does BlackRock actually own that Bitcoin? Because if you say yes, they do, well, then you would say, okay, well, there's legal definition of the investors, because the investors actually own shares in the ETF. So that's an indirect ownership. And some would say, well, BlackRock's ownership is also indirect because Coinbase hold it. I don't know if it's just semantics, but at the end of the day, if you look past semantics, who owns the Bitcoins? The ones with the private key that can spend it.
It does seem more and more, Josh, that these ETFs and other arrangements where someone else holds the Bitcoin are a bad deal. Publicly, Michael Saylor has said, oh, it's a great deal. We invest in the Bitcoin. We pay 10% to the person who gave us the money, and we make 50%. As long as the person who gave you the money doesn't learn that they could make 50% themselves on Bitcoin, not need you to hold it for them to get the measly 10% or 12% or whatever they're getting back. It's a very, very tight rope that he's walking, especially when he's out there saying everyone else should do it. And we have a story later, I don't know if we'll talk about much, but Anthony Pompliano is creating essentially what sounds like his own Michael Saylor will hold your Bitcoin for you company, continuing this trend as we've seen Metaplanet, as we've seen GameStop, as we've seen company after company, and this is the next issue. Yeah, Josh, it's crazy. BlackRock buying in, but yeah, I don't think they hold the Bitcoin. I don't think they should hold the ETFs. I think it's like Ben said, deja vu from the original 1920s with the Great Depression, where the new tool was not owning the stock and like buying it long. So you wouldn't own it, but you'd invest in it. Someone else would own it. You'd invest in it. So, and these stacks and stacks of worthless paper led to a mountain of worthless paper, and then everything crumbled. And they're all holding the paper. And Satoshi would want, like you say, Josh, for them to hold the keys, and they could make the 50%. They could take the risk, certainly. They could take the holding risk, all the other things. But it'll be interesting to see how it turns out with all these businesses around. And we should move into issue 4 because we're almost there already. Attack of the clones. Coinbase raises alarm on risks with Bitcoin Treasury model. A Coinbase analyst warned that the trend of publicly traded companies whipping up Bitcoin treasuries could trigger systemic risks for all of crypto. Ben Ark, what do you think about the Coinbase analyst warning us what we've been talking about as well, the infinite jest nature, the addictive aspects of Bitcoin owning for treasury companies? Why even bother making any widgets? And what if the market actually turns, they start dumping, they all start dumping? What if your treasury company is the last one to dump? Ben Ark, what do you think about the rise of Bitcoin treasury companies?
I mean, I think that they're kind of fine as long as the price is going up. What we do have is programmable money, which we didn't have before. So, like you said, Thomas, I think was the you can time lock Bitcoin, and that's how Firefish works. And I know a whole bunch of I think I mentioned it on the show last week. I know a whole bunch of people who work in Bitcoin get paid in Bitcoin, and then they need to pay for stuff with cash, and they go use Firefish. I feel like a Firefish shell now, but there's a bunch of good people who I respect who also respect that platform. And so essentially they're like loaning their Bitcoin, they get cash, they time lock the Bitcoin for a year from now. They can default on the collateralized loan, and it doesn't really matter because they'll get back the surplus of the value, and then the person who lent the money will definitely get back the 10% extra, which they gave the loan for. And I think the success of that platform shows that generally there's a whole swathe of people out there who believe that Bitcoin's going to go up in value. So thus, I will give you some cash, and I know that I'm going to get back that value. Well, thus I will give you my Bitcoin and lock it up in a time lock, knowing that the Bitcoin value will go up in price a year in the future. And there is some like wisdom to that idea, like the Laszlo thing. If Laszlo, when he bought that pizza, if he'd used a collateralized loan, which then settled, I don't know, a couple of years later, then he wouldn't have spent, you know, billions of dollars on a pizza. He would have spent, you know, maybe $1 billion on a pizza, and then he would have got more of the Bitcoin back. So I can kind of see the logic in delaying selling the Bitcoin into a year in the future or 2 years in the future, and then the person who's willing to give you the cash then gets a percentage for the collateralized loan. I can see the logic in that. And then if you extrapolate that out to these like treasury companies, I can see the premise. But then there is this issue that if Bitcoin drops heavily in value, which it probably will at some point, because it always does, then all of these treasury companies sell off and just try and save as much as they can and convert to cash, and yeah, just as causes little damage to their treasury company or their ETF as possible. Then that could be a huge risk, and it could really like, you know, like it would create a much more volatile dump. So yeah, there is a systemic risk. As I think I said it before, so it's good that guy's using the same terminology. But yeah, systemic risk of having these essentially were futures, aren't they, I suppose.
And it is the same story coming out of the other side, that you can have infinite money forever, that the price only goes up. And like you say, Ben, they'll be the ones standing around. They've already said, Michael Saylor just said a week ago, there will never be another Bitcoin bear market, which is a horrible thing to say if you don't want there to be another bear market. Josh Shigala, what do you think about Bitcoin treasury companies and the possibilities that it could overload and then cause a big crash?
Yeah, of course it could. This is the history of the world of derivatives. It's so yeah, it could definitely most absolutely happen. But the biggest thing is, yeah, building on the paper loans that are backing long positions. They're the real scary ones, because it's just cascades. It's like the little tiny domino, and then the bigger one and bigger one and bigger one, and you know, that classic. But yeah, to Ben's point as well, I mean, this is exactly why we built Bitcoin, built the standard, is that people can then, you know, borrow against it in a way that's provable. You have the collateralized loan, and it's all on chain. You don't need to trust a third party, and earn a yield on it as well by your smart contract putting it into Uniswap and allowing it to trade, or be as liquidity. But yeah, it could most definitely happen. Nothing's holding it back from having a huge bear market. The higher it is, the higher it can fall. But there's always Ben to buy it at the bottom.
As Trace used to say, the hodler of last resort, and Andreas used to say, if it goes to $1, I'll buy them all. But go ahead, Ben, you have more.
So I suppose what you're saying, Josh, is that there's kind of a smart way to do it, where you actually use the technology and things like the standard, and then there's kind of like a dumb way we should do it, which is like the legacy paper Bitcoins with an ETF or a strategy type thing.
Yeah, and you saw that with FTX. That's exactly what FTX did. Except they did it with, even worse, they did it with their own shitcoin. So they were making all of these contracts, these human contracts, on the collateral that they had in their shitcoin, and probably on their Bitcoin too. And this is what Saylor can do. He can make all these human contracts on the Bitcoin, so you don't really know how much. So you can proof of reserve it, like Saylor said. You could say, okay, here's the address, here's the cold wallet addresses, but you don't know how many paper contracts are actually promising that to other people. If price gets to so and so, so you don't actually know where. It's very vague. So this is why smart contracts are so important in the space, whether you do it on Bitcoin or anywhere else. It's that you can use a program to read through all the contracts and collate all the data and know where you stand. You could even effectively have like transparent pyramid schemes and stuff on chain, because at least then the players of those games can see where they sit in the game, am I coming in right at the end or at the start? Or like the idea of transparent bookkeeping is a really interesting idea for so many different ways. And we'll see it play out more and more. But yeah, it's these paper trails that are very, very hard to deal with. And you saw that in like The Big Short, for instance, where you had these people actually doing investigative journalists to try and get an edge on the market and going, how many of these mortgage-backed securities are actually defaulting on their loans? Like how many people in these rural areas are defaulting on their mortgages, and so it took a lot of legwork to do that. But with smart contracts, you could literally just run a program that would go through all of the collateralized debt and see what's happening.
See, that's really interesting because there clearly is something in collateralized debt, but the issue is always balancing the books. Like that's the whole point we have Bitcoin, is balancing the books. But if you can still have collateralized debt, if someone needs it, like they feel that, you know, the Bitcoin price is going to go up, whatever else, and they just need the cash, then the tools exist to do it properly. Yeah.
Yep.
It does seem, though, like Josh is saying, that we're doomed to do it the wrong way, that we're going to do it the paper way. We're going to do it the quick and cheap and easy way. No one understands technology. I know Josh knows what he's talking about with the smart contracts, but your average investor, your average CEO, whatever, they have no idea what's going on. And it's almost like we're in a horrifying loop of 100 years ago, and we're going to repeat.
Isn't that just like
and all the other things? I mean,
that's new meeting old, isn't it? It's like we have these new basket of technologies. They're meeting the old basket of technologies. And then people who straddle both those worlds, like the Michael Saylors, are able to, you know, exploit the bug.
It is interesting. He almost has an advantage, like you say, Ben, because he's old world and he's new world. I've always speculated people of my generation, I think it's Y, where you had the analog childhood, but then the digital adulthood had a unique set of tools. In that same way, perhaps Saylor has the analog financial experience, which he's now taking to the digital world. But it does seem like we'll have a lot of casualties and disasters before we eventually get around to saying that Josh is right and we should have them all on smart contracts and that you really can't trust these people. But it seems like we'd rather put $1 billion in one of these paper things and just lose it all and lose everyone's investment and so forth. And we're doomed to repeat it. I remember Philip K. Dick talked about the Roman Empire never ending and that history was cyclic and that it was repeating. And it feels a little like that. We have a 1930s type situation going. We have a 1920s type situation growing. No one remembers the 30s and 20s, despite the historical record and books and so forth being available. But we'll see how it goes. Hopefully we'll learn. It's never too late for everyone to learn. We've got some quick update stories here. I just want to get your guys' opinion and let the audience know what's going on with stories we've covered previously. Bitcoin Core developers commit to changing op return data storage limit by October. The controversial change expands data storage on Bitcoin to 4 megabytes, a move that has stirred debate for months. It sounds like they talked about it. They talked about it enough. They're going to try to push it through. Ben, Ark, really quick, we talked about this issue. People are trying to store more data in the blockchain. Seems like it's going to go forward.
Yeah, I think I got it technically wrong last time. I tried to give a technical explanation as to what op return is. Yeah. So I'm a practical guy. When the tool exists, I'll make stuff for it. Until it exists, when something's like ephemeral, when something's like theoretical, I find it really hard to kind of imagine what I can use it for. But then when it exists and it's a new tool which I can use, I'll build some stuff for it and it'll be cool. But the idea of a deadline doesn't really make sense to me, and I don't think it's going to go down so well. Like finding consensus on any change in Bitcoin takes loads of time, discussion, and then if it's kind of painfully obvious that change makes sense, then make that change. So I guess it's part of the finding of consensus is to declare that there's a 6-month time period in which we're going to try and reach consensus. I'm, for the idea, but yeah, it's I'm not sure whether anyone's ever going to be able to stick to setting a deadline of 6 months, because who can possibly make that decision? But but it will happen at some point. It's just it's a free and open source and something like a Bitcoin protocol. It's the sausage being made in public. Like it's horrible, but you end up with a beautiful sausage. So
I agree, Ben. I think you have to call for consensus. You have to set a deadline. Then you have to miss the deadline, call for it again, set a deadline, miss it, so on a few more times. And then maybe we'll get to a tight consensus. 4 megs is not a lot of data. Maybe if you put it all together, you could get a movie. Maybe you could put you could certainly put a book, maybe an image. Josh Shigala, what do you think? Op return and Ben's idea about the consensus and that we're just trying to get some agreement on this.
I mean, as far as I understand it, the op return limit are actually policy rules set by nodes, like Bitcoin Core, and so I'm not 100% on it, but whereas the block size limit was a consensus rule that needed to be enforced by the whole protocol on a protocol level. So like a 4 meg op return limit still actually aligns with Bitcoin's existing block size constraints, but and it doesn't alter them. But and in fact, miners can already include larger op return transactions in the blocks if they comply with the 4 megabyte block height limit. So yeah, I think it's I don't know if it's even a hard fork thing. It's just a Bitcoin Core node software upgrade, I'm pretty sure. So I don't know if you need consensus.
Well, we'll find out. The debate is continuing. We have more updates on stories. Go ahead, Ben.
I know that, so on a side note, I know that a lot of my technical buddies, my builder friends, are very, very, very excited about Arc. And I think that the op return update means that they can have Arc. So that's all I know. And again, they told me about it, and they told me what Arc is, and I'm like,
it's not Arc Investment with Kathy Wood. What is Arc?
It's not Ben Arc, is it? It's not you.
No, I know this fuckers. They stole my name.
Chain.
It's too much. Yeah, it's too much. They stole my name. No, so it's a way of using Bitcoin using virtual UTXOs, but it means that you can have much faster transactions and kind of, and I know we've heard this before with Lightning, but like an unlimited off-chain scaling solution, which actually benefits Lightning because you can have channel factories and build them like properly using Arc. That's about the extent of my knowledge. And I turn around to my developer friends and I'm just like, okay, when it exists, I'll make shit for it. But until it exists,
that's it.
Some of that crazy.
I'm the same with geography, man. Unless I go there, I don't want to know about it. I don't care where the capital of so-and-so is if I'm not there.
Exactly.
It does matter more when you're there. But let's keep it going. Got another update story. Unfortunately for El Salvador, there's bad news coming out about President Nayib Bukele. It looks like money that was given as foreign aid from the United States to El Salvador was perhaps given directly to the gangs in order to buy the peace and safety that El Salvador has right now. They say report highlights an investigation is needed despite his crime fighter reputation. His aides blocked extraditions of MS-13 leaders to the United States, perhaps showing a connection. Money laundering agents drew up a request to examine Bukele and senior officials diverting U.S. aid funds to help gang members, and allies threatened after threats from the government. It doesn't look good for El Salvador. Obviously, I have not been a fan of this situation. Of course, anyone can use Bitcoin, but we don't have to support them. I don't know, Josh Shigala, just briefly, doesn't look good for El Salvador. What do you think?
I don't know enough to make a comment on it, to be honest.
Yeah, it's not looking good. But again, the dictator took power, perhaps made deals directly with the gangs rather than the crackdown, which was presented to the public. Ben,
as far as I understand it, the gangs ruled everything. So it's very hard to go in there and just crack down on something where you are the minority, like unless you're the Spanish in Ecuador or something like that.
You could be buying informants. It could be anything. So I think it's a very politicized, vague argument, a vague report. Like,
Seems like it.
if you arrest the majority of an army, this gang's army, which is the MS-13 gang members, and if there's plenty of evidence, video evidence that these guys have all been put in jail and have been put in these horrible jails, which there is, then I don't think you can say that Bukele was secretly just working with MS-13 and it was all a big scam. It's like, no, he legitimately locked up all the MS-13 guys. The El Salvadorian population is suddenly safe and can exist without fear of being killed. And maybe at some point they diverted some of the funds to recruit some informants. Maybe that's what it is. But it feels like an agenda. It feels like a news story has kind of an agenda behind it. So
There are certainly two ways to dealing with organized crime here in the United States. They usually take down the kingpins, the people at the top of the organizations, things like the John Gotti investigation and so forth. In El Salvador, the story that's being presented is that by picking up all of the foot soldiers at bars and so forth, people with tattoos, that they've solved the gang problem. What the article seems to be saying is that the leaders of the gangs might have been paid the whole time and might have just sacrificed their foot soldiers temporarily while maintaining their power. So we'll see how it turns out. This is a developing story. We'll continue to cover it.
There was a reason why Microsoft never released version 13.
what was that?
Well, otherwise it'd be MS-13.
Well, and today is it's Friday the 13th. It's the 13th of Friday. Woo! But let's keep it going. We've got another story here. We don't know much about this. It's just developing. Czech government faces no confidence vote over Bitcoin scandal. They say that a felon may have sent a large Bitcoin payment. They were saying it might have been a while ago because it was 468 Bitcoins to the state. The man was in jail after being convicted in the drug trade, but they accepted the payment. It's just always interesting when you see Bitcoin in the headlines. Bitcoin corruption in Czechoslovakia, or not in Czechoslovakia, my Czech Republic. Ben or Josh, any more on this story? I don't really have that much, but it is fascinating to see Bitcoin at such a high level of potential government corruption.
I mean, it's been at the high levels of government corruption for a long time. There's, even through the Silk Road case, there was so many officers, and there was weird trickle things, and I don't know, like it could go all the way to Schumer.
Well, you never know, but let's keep the stories going. We've got a couple more stories coming here. Like we mentioned previously, Anthony Pompliano, a famous Bitcoin financial guy, is leading a new, quote, Bitcoin buying group and raised $750 million to continue the Pirate at 40 strategy, where they will buy Bitcoin and hold it for you. You can trust them. Walmart and Amazon are considering issuing their own stablecoins. We've talked about this idea for a long time, but now it seems like it's coming true. And I don't have the story up right now, but Coinbase has a just announced deal with American Express to launch a credit card in the United States. The credit card is, of course, metal, like all the cool cards these days, but has a very impressive looking Bitcoin Genesis block design with all of the hex code and then the times story. It looks cool. I kind of want one as a collector's item. Josh, what do you think? Walmart, Amazon stablecoins, Coinbase card, or what do you think about the Pompliano $750 million raise to buy Bitcoin for other people?
Yeah, it's wild, isn't it? Like, why? I don't know where the product market fit is there anymore, because there's already a lot of ways to buy it. I don't know why you trust Pompliano, because he would just be trusting Coinbase anyway. So you can use the BlackRock ETF, you can use Sailor, you can use Coinbase themselves, you can use many ETFs actually. Even if you're not in the States, there's plenty of it. I don't know. I mean, there's obviously people want it. He raised 750 million. Yeah, it's nothing to scoff at. So, but it's funny that we talk about such large sums these days. That to me is a sign of inflation, is that we casually drop like, oh, this guy raised 750 mil, and it's like just a side story that we don't really comment on. Like the sums are so ridiculous now that that it does make you sort of stand back and go, inflation. Yeah, it's a thing, right?
It does seem like an affinity scam, Josh. Like they're just going around to their followers. People who follow Pomp would presumably invest in his investment vehicle. Perhaps you could go around celebrity by celebrity. People who like Ben Affleck would invest in the Ben Affleck Bitcoin buying investment vehicle, so on and so forth.
Oh,
until
fortune favors the
every
brave.
community, every Taylor Swiftie, every single one, every vampire fan, whoever we got out there has all been exhausted and affinity scammed into buying Bitcoin for someone else to hold it. Which again, because they wouldn't listen to normal people when we told them to buy Bitcoin, they'll only listen to celebrities or to Jim Cramer or to finance people. This whole not thinking for yourself thing is just rampant out there.
Yeah.
Ben,
Yeah.
got some fun stories. We'll go back to you in a sec, Josh. What do you think, Ben, on the Pomp story? 750 million raised.
Yes, if you're like a big name within the Bitcoin industry, as in a big name, you know, within the sort of regular news cycle, the Jack Mallers or the Bailey or this guy, the Pumpy guy. Yeah, this is the new thing. You create your own treasury company, your own strategy, and then you raise a shitload ton of money from people. And like Josh said, the figures are just eye-watering. And it for me, like as I said before, you know, we've been raising money for Bits for a while. It's hard raising money for a company. You got Bits, which is powering like a large portion of all the companies building payments on Bitcoin Lightning. And we're raising like $1 million. Like it's like a pretty low amount of money for a company in Bitcoin and Lightning. And it's like a bit of a struggle. And then these guys come out the gate and they're like, yeah, I'm raising 900 million and 1 billion and 600 billion. And you're just like, oh, okay, cool. Like, hopefully some of that money will make its way down to the development community so we can actually build the thing which gives your thing value.
Their idea is so weak, Ben. They just want to buy Bitcoin and hold it. It's this pirate at 40 Ponzi scheme idea. And it makes us, they could have done it years ago, but you would have looked bad. Now, apparently it's fine.
I mean, so like,
Josh?
It's that people like you and I haven't been to Diddy parties. That's why.
Yeah, the oily Diddy parties with fucking
The oily
Pomp and Mallers and Bailey. Slurping octopus and slithering around with the baby oil.
750. Yeah, I got it.
It's nothing.
That's $750 billion. $750 billion or
a billion, even
$1 billion. My bad. But internet will kill me on that. But
no, yeah. So like the reason Bitcoin has value. So we build for an open source apolitical money with no trusted third party. That has value. We build a bunch of tools, useful tools for doing that thing that gives it value. Then you have the people come in and say, okay, well, I can just buy this thing, piggyback off that, and then it will go up in value because it's it's useful. It's a useful software project, and it does go up in value, and they do make money. But within Bitcoin's thread, there always needs to be it being used for apolitical free and open source payments as an opt-out from the traditional financial system, and that's what gives it, and has always given it value. So hopefully, like this is the worst thing about Michael Saylor and strategy is for all of his talk and all of his, CNN stuff and whatever else, he hasn't given a buck to Bitcoin development, which is just perverse in my mind. When you have a whole bunch of developers who are struggling to make ends meet and they have all these great ideas and all these great things they want to build to actually create more value, and yet they're struggling to raise money. So he needs to sort his shit out. And
it's so short-sighted to do what they're doing, Ben, to just be a parasite on the Bitcoin, to see the thing that gives it value, send it around like currency, continual software development, to not contribute to those things, but to build bigger and bigger organizations that do nothing but hold the coin and make the money.
And then worse than that, their Saylor then turns around and publicly says, oh, no, Bitcoin needs to ossify. The adults are in the room. No, Bitcoin needs to ossify. And you're like, fuck off, dude. Like, you've made your money. Just enjoy the money you've made. Well done. Carry on. But yeah.
That's what I heard years ago, is that the younger generation has no concept of selling out. In the past, you'd say, Michael Saylor, you're a parasite. And he would have shame about that. He would say, gosh, I should give $10 million to LN Bits because that will make me less of a parasite and I could improve the community. It'd be like the Grinch who saved Christmas. His heart gets really big and he's like, you get some development money, you get some development money. But instead, selling out is cool. The fact that he's found a way to parasite and vampire on this Bitcoin, this political, crypto, technological project you guys have worked so hard on, that's actually cool. The fact that he's not doing work, that he's not helping development, that he doesn't understand it, that he doesn't want it to be currency, that's cool.
Yeah.
Very sad world.
And then the Amazon story, going back to the Amazon story, that's an example of like, even if we haven't got fairer regulations or clear regulations in Bitcoin, that's an example of companies feeling that they can research and develop like some as if there were to be, or in the future we're going to have some easier regulations or fairer regulations or clearer regulations. So like that makes me very bullish about general Bitcoin payments. I know they're talking about making their own stable coins, but that these public companies are now actively, openly talking about developing solutions off the back of, you know, the clearer regulatory environment, which we hopefully have at some point.
Although the actual benefits to consumers seem incredibly small. We all know about gift card markets and how Amazon, other companies give out all of this gift balance. No one ever spends it. It's like free money. They even get percentages on it and so forth. This would give them the ability to have their own gift currency, incompatible with each other, a virtual Tower of Babel, all speaking different languages. Walmart, Amazon coin, so on.
So
and
Amazon
so
makes
to help anybody. I mean,
well, Amazon makes most of its money from web servers, so probably using some digitally native like stable coin with web servers probably makes sense. I can't really think how right now, but
it's not that different if I have money in my account and you debit my balance or you debit my card versus you debit a pile of stable coins. I think the main difference is that Amazon or Walmart would get the fees on the stable coin. So every time you use it, they could get the extra penny or whatever it is and collect $1 million.
I think it's probably the cost of transaction. So like earlier today, in fact, I had to go and pay an Amazon web server bill of like 80 cents or something. For, you know, which is where we when we back up our SaaS, that's where it goes to, and it's a really small amount of money. And often the way they charge people is probably clunky because of the Visa network restrictions. So maybe they're just trying to bypass that for their Amazon web server. Just, you know, thinking off the top of my head.
And maybe they'll have a cool logo like an A or a W on a coin. Josh, we've heard this before. Amazon coin, Walmart coin. What do you think?
Yeah, it makes sense. I mean, I don't like centralized stable coins. I think they're an abomination. But they are what they are, and you can't stop them. And you know, the idea is out of the bag, and it is what it is. But yeah, I wish they would use something, you know, like what we've created at the Standard with USDS, fully collateralized, overly collateralized by like Wrap Bitcoin and ETH and some other you know, blue chips. But yeah, I don't know, you know, these things, I guess they would promote then people using public-private key cryptography within transactions. Because to me, it's still crazy. It's absolutely nuts that when you use a credit card, you have to give people over the phone your credit card private key. Like, I'll read you out my private key. And you actually read it, and the smart asses at the credit card companies are like, too many people are getting scammed. We need more, you know, security. So the one guy says, we'll add 3 more numbers on the back of the card. That'll fix it. Oh, you know, and they invent this easy EVC number or whatever it is. It's so just retarded. And I'm allowed to say retarded again because Trump signed an executive order to say that's all right. So it's retarded, and I just can't believe it. So maybe these stable coins coming out of Walmart and stuff will allow us to allow the normie, you know, the giant sort of people of Walmart's types to learn about public-private key cryptography.
And then they can all learn about insider risks, programmer problems, other things that could happen to Walmart coin or Amazon coin, hacks, thefts, all kinds of fun things where if they just had gift card in their balance, how you can't steal it. I mean, it's more difficult to steal. This seems easy.
There's a great quote in the chat, which is that regarding us calling microsailor a parasite. It says like a surfer is a parasite to the wave, and I thought that was very cool.
That is very cool.
Kind of turns me around on Michael Saylor. It's a good
Well, he's not a surfer.
Waves go up and down. He says there are
liner.
no waves. A surfer who says there will be no more waves. Like, listen to what he says. There will be no more bear market. The
There'll just be
surfer
one
will
big fat wave, and he'll just ride
just
it.
one wave forever, no problem. Which also blends into our last story. But first, and this is not an ad, but I got to give it to Coinbase. What do you guys think? This is a sharp-looking credit card. It's got the actual, I'm going to get messed up here. I think it's the hexadecimal information from the Genesis block of Bitcoin, followed by the famous The Times 03 January 2009 Chancellor on the brink of second bailout for banks. What do you guys think of the Coinbase credit card?
I had that. We when I owned Voltoro, that was the T-shirt that we had, and it's sold like hotcakes. Well, we gave it away, but we gave it away like hotcakes. People loved it. So we were cool before it was cool, I gotta say.
Excellent. I agree. It was cool. Ben Ark, what do you think of the card?
Makes me want to get a Coinbase account, I'll be honest. It is a pretty sexy card right there. I was sold when I saw the little video and then the thing, and then it spins round and you got the card with the Genesis block on it. I was like, that is a sick card right there.
And the video is full of like vroom vroom sounds about how fast the card is and vroom vroom. But yeah, I kind of want it as a collectible too. I think it's just this kind of little piece of Bitcoin history written on a credit card, even if you're not a fan of Coinbase. But let's head to the end of the show. Ben Ark, you ready with a prediction or a story of the week? Go ahead.
Ooh, what a cracker. So this week we released finally the, I've got it right here, in fact, and I made a video on the LM Bits YouTube channel, so go check it out. It's the Noster remote signer. And talking of public key cryptography, this is so sick. So I can have my private key on here. It's plugged in at home. My Noster private key, my NSEC, is plugged in at home. I can be out and about with my phone all day long, posting on Noster, and then it uses the bunker protocol, so it just has a relay, and then this is connected to a relay. My phone's connected to a relay, and then this pulls the note down, signs it with my private key, and then publishes it to the Noster network. But I just really like. So we've always had with Bitcoin. Obviously, when you're dealing with public key cryptography, you need to keep your private key very safe, and then you have your hardware wallet, you plug it in, you sign your transaction, you click the button, and that's good. And originally with Noster, we built similar sorts of signers for Noster, but obviously with Noster, it's kind of a different thing. You know, you're on a social media network and you're just signing notes, but you don't want your private key on your device. So this little thing is honestly so sick. It just works. And it's so fast, like you plug it in, it connects to the internet, connects to the relay, and then you're ready to post. And I can just be walking around posting. And already it's making me feel much happier about using Noster, because I'm less scared of losing my NSEC. And if anyone wants to go buy one, then you can from shop.lmbits.com. It will help support the project a lot. So please pop along to shop.lmbits.com, go to the Noster section and buy one of these little remote signers. But very, very cool. And it was Black Coffee who made this, someone who works in LM Bits. And more of this is what we want. More interesting ways to manage your public-private keys, because public key cryptography is the answer to a lot of humanity's problems.
Well, that sounds fantastic, Ben. That's at shop.lnbits.com. And like you're saying, with the current implementation of Noster, your private key is the thing that controls your posting. So if somebody gets your private key, they can post as you. So it's a real problem. Having it in that secure device would make it harder for people to get that private key, harder for you to essentially lose your Twitter account in the same way you'd lose your Bitcoin account. It would be bad.
I also thought as well, like on exploring different ways of dealing with, private keys, that this probably does make sense for like an exchange or something too. When you have like a Bitcoin hot wallet, and you just need to sign transactions and publish transactions, and then but you want the keys offline. You don't want them on a computer or on a server somewhere. So I think there's a whole bunch of applications for this thing which transcend Noster. Um, yeah, it's cool.
Absolutely. It's like a warm wallet.
Yeah,
It's
warm
not
wallet. I
it's
like it.
not hot, it's not cold. Lukewarm. Luke Dash Jr. warm.
And people have been trying to develop that for a while, Ben, that the warm wallet idea, like Josh is saying, it's a real thing. Josh,
We
go ahead.
started at
Prediction on
Voltoro. We had
Coveted.
hot, warm, and cold. Yay. Back in the day. 2000.
Very cool.
Yeah.
How did you do the warm wallet?
Well, it was basically a wallet that we would show in the transparency protocol that had the amount of the users, so we could prove we had that much Bitcoin, but it wasn't the cold, which was totally off. And then we started working on using the pub uh, the pub seed. Forgotten what the name of it is.
X-Pub.
But yeah, that's right, the X pub. But that gets yeah, it's kind of gets scary releasing that for transparency. But the story for me is it's not as cool as Ben's, but it is pretty cool. We released a little app called thekey.fun, and it's on Arbitrum, and it was a fun little use case for USDS where people basically there's a treasure chest and there's one single key, and people buy the key, and then a hodl timer counts down. It's all within a smart contract, so the hodl timer counts down, and they have to hold it until that countdown hits 0, or somebody else can buy it off of you for 0.4% at any time, and the hodl timer restarts. So and every time it gets bought, the amount 70% of that price goes into the jackpot, and so that jackpot keeps growing, and it's people have been buying it like crazy. And the good thing is, every time you hold the key, you get a dividend shard, and 10% of the price goes into the dividend pool. So people are collecting these dividend shards early on, and it's pretty fun watching it just play out, because people are buying these keys, getting these dividend shards, and then being able to claim from the dividend pool the amount. And because the key price goes up and up and up, like it started at $1, now it's at 4 something or other, nearly 5. And it's just fun because and this is the fun part, and this took me ages to go this last bit, even though most people won't see it, because most of the game is this key keeps on moving because the hodl timer keeps resetting. But eventually the key price will get to, like, I don't know, 500K or whatever, some massive price, and they'll be able to hold it down to 0, down to the hodl timer, because no one else will want to, try that. But if it hits 0, they go into a prisoner's dilemma, where the 2 last key holders have to decide whether to split or steal the jackpot. And it was fun coding it, because they have to choose, and they mix a salt with it, and that gets hashed and puts into the smart contract, so it's on chain, and both players do that. There's a hash, and as soon as both players have the hash up there, then they go into a reveal phase where they send their choice in clear and the salt, and the smart contract hashes it then and says, yep, that matches. So the rules are, if it's split, then they 50-50 the jackpot. If it's split steal, then the thief gets 100% of the jackpot. But if greed takes over and both people steal, then they get nothing, and the jackpot gets dropped onto everybody that ever held the key or the dividend shards. So it's a fun little game. It's some would say it's I don't know. Some would say it's gambling. I just find it's a fun game. There's no house or anything. It's all just people playing with smart contracts, and it's all open source, free and open source, and it's fun. So check it out at thekey.fun.
What is it? Sorry,
thekey.fun. It was fun making the homepage too. It's got this awesome key that we generated, and then we made it living hold with smoke coming off of it. It looks really nice.
Get it up, Thomas. Get it up. want to go see it.
It's been fun just creating something quickly, like,
Ooh.
and then we had a open source, a guy just come and audit the smart contracts for us, and then we made some changes and fixed a few little things, but it was great. Yeah, super fun.
That's amazing.
Well, it
I love
sounds
that.
fantastic, Josh. It
Yeah,
reminds me of Satoshi Dice. It's a bunch of things connected, and I have no idea what you're saying, but if it's all on chain and provable, people will play. People love games.
Yeah, well, that's it. That's it. It's all on chain and provable. Yeah, we have one little server just running the homepage here and connecting to the ABIs, which is the on-chain stuff.
I love the prisoner dilemma part in it too, because the game theory of the prisoner dilemma is where a lot of this stuff starts from, isn't it? It's a lot of where Bitcoin came from was the prisoner dilemma.
Absolutely, it's the key to game theory is prison's dilemma, and because it's the perfect mix, and like instead of just steal, everyone loses. I thought, well, steal, and everyone that bought the key before you wins. So, including those two last players, because they might have some dividend shards, because the jackpot gets dropped into the dividend pool basically. But yeah, it's been really fun to code, and people should start coding stuff. Now with AI, you have an idea, you can start coding things up, and it's totally fun, and get into it.
I like the site as well. The site's very slick. Did you build the site?
Yeah.
And you're clever.
It's when you're fun, when it's fun, and it's when you're having fun, it's not like work. Hence,
Well, let us know in the chat and the comments below if you guys want to try it at thekey.fun. You can try it out. And let's see, before we go to the last story, I just want to say Josh and I got the same hat, just days apart. Mine is A's colors and says extra large, has an elephant similar to the A's logo. Josh is a giraffe. What does it say, Josh?
It says hi, and I'm 6'9", so it's like it suits me to a T, and I've got a little Bitcoin logo on it.
So it's pretty fun. Shout out to Gore. I think it's called like Gorin Brothers. They make these animal patch hats. They're kind of fun. And then we have, of course,
I never even knew. I just walked into a little shop and I had this little hat. Don't know the brand or anything.
I just saw it as an Oakland A's hat without being an Oakland A's hat. And I love the idea of that with the moving situations going on and such. But we do have a sad story to end with, unfortunately. A sad farewell to Brian Wilson, the Beach Boys co-founder and architect of pop, dead at 82, as Rolling Stone says, one of America's greatest songwriters and the composers of Teenage Symphonies to God, invented a massively successful sound full of harmonies and sunshine. And if you want to check it out, there's a great movie called Love and Mercy with Brian Wilson, played by Paul Dano, and John Cusack. It shows the making of Pet Sounds, just an incredible album, and the work he did with the studio musicians. Famously, the Beach Boys went on tour. Brian Wilson stayed home with the greatest musicians ever and made pretty much one of the best albums of all time, Pet Sounds, if you haven't heard it. And then, of course, his Beach Boy friends didn't like the album, and there's a lot of controversy. Of course, the Beach Boys, a classic band, the Brian Wilson, the heart of them. Josh, Ben, anything more you'd like to say on Brian Wilson or any of the topics from today?
No, rest in peace, man. Rest in peace. I wonder if he eventually learned to surf. I don't know.
It was interesting. Brian, he famously hated the water, hated the waves. The Beach Boys were not surfers, but they sang about surf culture, and in many ways, it was kind of an idealized culture, kind of an imaginary dream world of California that people wanted to enter. Ben, Ark, any more on Brian Wilson or any of the other topics from today?
I mean, he lived a bloody good life, didn't he, old Brian? Like, wasn't he the guy who recorded the album with Charlie Manson? Wasn't that Brian Wilson?
I think it's possible.
It was, yeah, it was Brian Wilson, wasn't it? Because he had a house full of babes in California, and he's just recording music, and then Charlie Manson turned up with all of his ladies. Well, I mean, they're probably a bit too young, really, but we'll set that to one side. So I think Brian Wilson had a lot of fun in his time. But yeah, 80s. I mean, it's good innings. Not a bad time to go.
Yeah, parasites on the surf culture. Starship Schrodinger's destiny.
See, it all has to do with the wave.
Brilliant.
It all ties back together. We also had the loss of Sly from Sly and the Family Stone. Some are saying that they were both 82, and perhaps it's a new 82 club of people that lived pretty well, but lived a long time, lived kind of more responsibly maybe than Jimi Hendrix, and the 33 club, a lot shorter club. But just fantastic music, of course. Thanks to copyright, we will not play any of it or dare to sing any of it, but many of us know many Beach Boys tunes by heart, and of Pet Sounds specifically, just an incredible album. Brian Wilson, 82. But thanks to everybody for watching and listening, giving us a thumbs up down below, saying hi in the comments or in the chat. I'll go read the chat now. It's going to be very contentious. We were critical of Saylor, and of course we discussed the Israel-Iran situation, which a lot of people get excited about. But it's all happening in Bitcoin. It's all stuff we have to cover because it affects the price and it affects the Bitcoin. So thanks so much for joining us. Until